So, I'm gonna teach you, or at least try to tell you in the best way possible, on how to use my model, which is standard deviation, OTE, and ICT concepts. Okay, this is what I have written. It took me like roughly 2 weeks to get like the gist of like the whole concepts. However, basically we rely on the Fibonacci tool extremely. We use the Fibonacci a lot in this strategy. So here is my current Fibonacci settings. Okay, so when you're looking at all this, this is my current Fibonacci. This is for standard deviation only. The -1, the -1.5, the -2, the -2.5, the -2.25, the -3, the -3.5, the -4, the -4.5, the -5, and the -5.5. Using all of these would be our standard deviation levels. Okay? And so, how do we mark out standard deviation? Well, we are going to be marking it out on mark Stdv on midnight open, which is at 12 a.m. or 00 London, Asia, and New York, pre-New York. Okay, I know. This sounds scary already, right? It's like, oh my god, I'm marking out so many standard deviation levels. Well, the problem when it comes to trading this, standard deviation requires extreme patience. Okay? So you have to have the mentality of you might have to wait the whole day, because when it comes to my strategy, this strategy is just being a top and bottom ticker, okay? And the most struggling part about the strategy is you have to wait for it to get levels. Okay? I know, that sounds like a lot. However, if you get the basic concepts of what I'm gonna give you, this should help you improve your trading at least by 15 to 20% win, like an extra 15 to 20% win rate, if you put in some of the concepts I use. So, how I will give you examples. Okay, so what I believe is market moves in 3 phases or 4 phases: accumulation. Okay, accumulation. So this is where we're just relatively just chopped sideways. We're generating liquidity, okay? And manipulation would be the breakout of the range, okay? And our distribution would be what we want to trade. And so, how do we mark out standard deviation legs? Well, using the manipulation leg, okay? So, in this context, we are going to be in a bullish manipulation, right? So, we are going to be putting from the bottom to the top Okay? From right to left. That is how you mark out your manipulation leg. Okay? Or, so, another problem, right? So, market moves in accumulation, manipulation, distribution. Although, granted, you won't always see it correctly because, you do need a lot of discretion trading this. So, keep in mind, if you are trading standard deviation, you are going to need a lot of discretion trading this because all these levels that you see here might not work because it's pretty much just a game of stacking. So, in a basic scenario, right? Let's look at the 15-minute time frame. What do we have here? We have a phase of accumulation, right? We have a phase of manipulation, and we have a phase of distribution, and then the cycle repeats. But also we have a thing called AMDX or XAMD, which is just the expansion of that phase. In this scenario, this will be an AMDX as we have expanded higher. Same goes for this. Accumulation, manipulation, distribution. Okay? That's just the very basic concepts. Okay? See how we're generating liquidity? We broke out, and then now we displace higher. Distribute higher. Granted, this is not this is like a very simple example, but this was just pure news. Okay? So that's the basic steps of AMD. So, how can we use AMD to mark out our legs? Well, like I said, you do need a bit of discretion. However, we mark out our legs on London, Asia, and pre-New York, as well as the Midnight Open. So how do we do that? Basically, ICT, kill zones, and pivots will tell you all of it. And make sure to mark it out on mark Stdv manipulation legs on the 2 min, the 5 min, or the 15. The 15 is when price is very trendy. Okay? Alright, so in this context today, we could also use AMD as our daily profile. Okay? Accumulation in our Asia session, manipulation in our London session, and distribution following continuation in the New York cycle, coming with a expansion or a reversal to the downside. So this will be an AMDX. So, now, back to manipulation legs. This is based on the 5-minute candle. So, manipulation legs only work if we have a break of structure and some sort of liquidity sweep. And what did we do in London? We had a break of structure with a liquidity sweep, and this is how we mark our leg. From the bottom, from right to left, to the swing, and bang. And what do you have here? You have a absolute top tick of doom. Going 74 points using a 10-point or 5-point stop. We'll do a 10-point. You just made a very simple 1 to 8 RR trade like that. Granted though, you shouldn't really just take it off standard deviation levels. You should base it off what is the market, what market is doing. Are we in premium and discount using daily open and midnight open? And do we have any sort of PD arrays aligning up, like fair value gaps, order blocks, rejection blocks, or whatever you want to put in there. Okay? Those would be what you want. Now, this is part of the manipulation leg, right? Say, how do you draw it? Breakup structure with a liquidity sweep. Now, Asia can be a little weird and wonky because typically it usually just accumulates. However, if we have some sort of nice probable manipulation, then we could start talking. So, how can we find a proper manipulation? Granted, this is not the best kind of scenario for it. However, you can use this. From the swing, right here, to the swing, right here. Right? And what did you do? You have made, there's a level right here. You will have top, you will have bottom ticked. If you did a 15-point stop or 10-point stop. Okay? But like I said, don't take it off just purely off standard deviation legs. Okay? We have to make sure that we have something. And what do we have here? We have a rejection block. So, that being said, right, our standard deviation level is here. Our confluence is right here. What do? We simply trade off the rejection. And a rejection block is simply something that takes out some sort of liquidity. So we created liquidity right here. This is our sell side. We swept it. We created a massive wick. And we take our fib, take it to the midpoint, from the top to the bottom, because this is a bullish scenario. Our midpoint would have gave us an absolute top bottom tick. What did we do here? We pushed up 26 points. Granted, not the good, not the best, but it is still a trade regardless. Okay, so what we do is we just stack levels. Okay, so if you're looking for shorts, just reverse it. And what do we do? The negative 2.5 lines up here. And what could you have caught? 5-point stop loss. 10 points. You would have had caught 164 points. So this is like a 1 to 20 RR. Okay, so and also and midnight manipulation. Granted, this is not the best, but here's midnight. What did we do immediately? We manipulated lower. Simple as that. Just draw the leg. That what do we do? Directly at midnight, we manipulate lower. Just draw from there. And how do these levels align up? Right, you see? So we just stack levels and stack levels and stack levels. There we go, there we go. You would have caught some sort of trade right here as well, with 50 points, 60 points. It's the whole point of standard deviation is to stack, just stack levels. And then next thing is our New York, which is at 830. 830. So what did we do immediately? We gapped up. This, you wouldn't really draw anything here because it's kind of messy. But right to left, and a swing. Always right to left. Always right to left. So you wouldn't get anything here, obviously, but these are what I will mark out. Okay? Now you know how to draw your manipulation legs. Okay? You will then move on to OTE. So what is OTE? Okay? OTE is just a retracement. Okay? So how? So you may ask me, how do we draw OTE? I'm so confused. How do we draw OTE? Very simple. Use the Fibonacci. Just like that. Here is my OTE settings. Right here. Focus normally on the 0.5, the 6.5, and the 705, okay? Any other part of it is just very deep retracements. So, how do you draw OTEs? Go on the 15 minute, okay? And you want to mark it from the high to low. So, what that means, usually, I'll mark it from London, usually I'll mark it from London. However, sometimes I like to mark it from sessions. Granted though, this is not the best price action for me to draw anything. How? So, we'll be using New York. Okay, so from previous New York down to New York lows, what did we do? We have 705 retracement, 6.5 retracement, 0618 retracement, and OTE. Well, you will know when OTE works if you get some kind of reaction based on the levels. So, kind of like this. So let's say we hit, market does this, it hits this, the C, the 50%, and it bounces, and it goes down again, and it bounces, and it bounces, and it goes down again, and it bounces. That's how you know you would draw, that's how you know you would be able to draw a perfect OTE. Your OTE works. So in this kind of scenario, you would be drawing it from 5 minute because it's a lot cleaner, and you will be drawing it from London High to New York. However, in this context, right, because we are above our daily open, which is at 2, okay, our daily open, and our 6 o'clock, you will only be looking for shorts, because this is our premium and discount. So if we are above daily open and the midnight open, which is at 6 and 12, we are only looking for shorts. So in this scenario, we are looking for shorts. And basically, you can either put it at a swing low or swing high, or you can look. However, I like to have levels already lined up with it. So right here, this is lined up with the 812. Granted, it's very deep pocket retracement. You got a limit there. You will need a 15-point stop loss. 15-point stop loss, targeting some sort of draw on liquidity or a set amount of points. So normally, you would target at least 100 points regularly, 60 points. However, what I like to do is I like to trail, and I would like to trim. So I have certain TPs. 50 points, I take a TP. 100 points, I take a TP. The rest is just runners, because everything else would be in break even, or I have a trail in profit. Okay. Very simple strategy. Like I said, you do need a little bit of discretion. You do need extreme patience. So just because you see a bunch of levels, don't just take them willy-nilly. Line it up with PD arrays, like fair value gaps, order blocks, rejection blocks, whatever confluence you use, line it up. The more stacked it is, the better it is. That's it. The standard deviation is just very simple. It's a stacking game. Simple as that. Okay? You're first. So now from the steps, right? We're gonna take a little recap. How to mark out standard deviation legs. Mark standard deviation midnight open, 12 o'clock or 0, so midnight. Mark it out from London. Okay, make sure it has a break of structure and a sweepage of liquidity before you mark out any legs. If you mark it out on just a random ass leg, it's not gonna work. Okay, and then now Asia and pre-New York. These are how I mark it, and make sure that we are only looking for shorts or longs if our daily bias is below or up. If we're above our daily, which is daily open at 6 o'clock, and midnight open, we are looking for shorts. If we are below, we are looking for longs, vice versa. Okay? And like I said, the main importance of standard deviation is you need discretion. Okay? You can't just have a bunch of, hey, I'm gonna put a limit here, I'm gonna put a limit here. Don't do that. Just stack up levels. That's it. I hope that helps. Of course, I will be recording it. I will be recording it. You know, granted, I don't think anybody really cares. However, I will be showing it through the live, and that's it. I hope that helps. Any questions? Alright, cool. I will now end this. I hope everybody take care.